So it's my pleasure to be here with Chance Barnett, the co-founder and CEO. So I want to talk a little bit about your background first, the arc of your career that brought you to starting Crowdfunder. Talk about that.
So one of the first companies I started was a company that came out of some of my interests both in communication, in using the internet to distribute a mass global level of information and learning and knowledge, which I know is something you're passionate about. So that was a company called Hot Topic Media. And I started with a partner of mine and helped scale that business. What it really was a learning and education publishing platform that took experts who had great advice, who were transforming people's lives, and it helped build an audience for each of those experts. I was not only an expert myself, but then I also went out and coached other writers and speakers who were doing really great work helping people and adding real value to their lives. So that involved a lot of what I would say is some of my personal passion, which is interest in psychology and transformation. That's some of the highest leverage opportunities in people's lives. Learning great skills is one thing, but understanding what the process of transformation for yourself and for others is a huge part of leadership and growth and entrepreneurship. So that was an area where I focused on communication and psychology very significantly and built a successful publishing business over about a 7-year period. With that business in place, we had a virtual team, which was a unique experience. And at the point that the company had about 45, 50 employees, I started spending more of my time on other passions that I had, which were much more technology and systems focused. So I had helped architect and think about and build some automation around the marketing engine that was this publishing platform. And that became my area of interest and focus after that, was building more ambitious technology product. So my next venture after that was a company called Gig.fm. Okay. And I created that as, in part, a passion project. I'm also, I guess I would fancy myself a fairly creative person. So I play music, I surf, I love traveling a lot. And so this helped bring all those together. What it was a concert personalization tool that allowed you to have your iTunes library read and then got your location based on your zip code, and then introduce you to the shows of the bands that were coming to town that you liked the most. So this aggregated a lot of ticket data on the web, but made it highly social, because that was the experience that I saw was missing. Was not only was it hard to keep up with that, but then everyone would, when they're interested in going to a show, email out all their friends, and it was this messy social process. So also streamlining that. That was, I would say, both a great opportunity to create a great platform, which I felt was a great success, and also a failure in learning some new lessons about the types of ways to structure long-term deals with people and yourself to make sure that you go off into the future together. And if something happens to not work out, to figure out what to do with that. And I would say that was one of my $1 million lessons, was the failure to create the right relationships as the initial founder of the company. Subsequent to that, I've created a few other marketing tools that are focused on advertising, one of which was a quiz platform that helped people within Facebook build viral quizzes to engage their brands and audiences, and then do like generation and lead generation within that. So a social focus about engaging people through their brand pages in Facebook, but then also taking that down to the nuts and bolts of how is that of value, and how do you build a customer base through that. So that kind of puts me towards today, where more recently I became a small-time investor and an advisor to several early-stage companies. I like to get involved when I feel like I can really tweak and massage and test the business model to make a big difference in that founder going from the first year, where they're just really validating their ideas, and having a huge impact on the long-term direction and focus of the company and getting on its feet. That's why I feel like, and I'm really excited to start to do that at scale at Crowdfunder, is that.
So let's talk about how many companies have you been part of the founding team of?
4 companies.
4 companies,
and this makes my 5th.
Okay.
Yeah.
And so, and I think, like me, you probably love the founding creative energy. It's just, it's a blast, right? Nothing like it.
Yeah.
What was the moment that led you to create Crowdfunder? What was that sort of, was there a moment?
Yeah.
Okay, talk about where you were, who you were talking to, what the impetus was, what was that generation moment?
So I saw this, I'll say one of the things that had been a challenge for me, and then I watched a challenge for other entrepreneurs that I advised, was the fundraising process. I think you know this very well.
Too well.
You can be a great entrepreneur, you can have great sales and marketing skills, you can have technical skills, you can have leadership skills. Somehow that leads you to believe that you're going to be a fantastic fundraiser, and that is not the case. Fundraising is its own beast and animal. Investors think very differently than entrepreneurs, and if you don't speak that language, you have a large education ahead of you. So that was a big challenge for me in being a successful entrepreneur that had bootstrapped a few companies, and I thought I knew it all, and I would go out and be able to raise money based on that idea, and that was certainly not the case. I had seen that happen for several other successful entrepreneurs who got traction in their first year or two, and then experienced the same challenges, basically having to take 6 months out of their life to put the execution of their company on hold and have to go out and fundraise, and then often failing at that process. So that's one reason why I was really really excited at the idea of creating a potentially more efficient way for companies to engage a larger social audience and raise money from them. But what really triggered it, and was the one moment, was I saw a story about a bill that was going into the House of Representatives prior to it actually being introduced. And that story was about a group of guys called the Startup Exemption. And what they had done was they were successful entrepreneurs in their own right, and they had raised collectively across three of them $87 million in capital for their collective ventures and returned several times over to their investors. But when the markets dried up in 2008, they had gone back and had a successful venture. They needed to raise money back from those same investors they had already returned from, and those investors all said no and said sorry, and they were left out in the cold, and their company died on the vine. For them, that was unforgivable, and it made no sense. So what they decided to do was channel that energy and that frustration somewhere. And so they created a 10-point framework that they took to Capitol Hill and just became guerrilla and said, this has to change, here's our story, and we want to change it on behalf of other entrepreneurs. And they were impressively successful in the short term. And when I read the story about what they were doing, it was the perfect timing, the perfect light bulb, the perfect opportunity, and I think the perfect economic time right now for the US.
Can you describe roughly what their 10-point program was? What was their ethos? What were they trying to accomplish?
So it was called the Startup Exemption. And really what they wanted to accomplish was to create a way for investing to be brought out of smoky boardrooms and investor decisions where there's not a lot of transparency and there's not a lot of data and openness about that process of fundraising, and bring it into the digital age, to the internet era, and say not only should a class of people who are existing investors potentially have better opportunities and more opportunities to look at and vet deals and invest, but there should be an entirely new class of investors who have been left out on the cold to date, which are everyday people who, just because they weren't wealthy, that didn't have over $1 million in their bank account or $200,000 on an annual basis.
Qualified investors.
They weren't qualified investors. Those people had no access to even funding with $500 a restaurant down the street, even if they liked it. So this brought an entirely new class of people to the table to benefit and participate in the wealth cycle, if you will, of investing and getting long-term returns. And then it also created a marketplace for entrepreneurs to not have to be just beholden to the fact that they either do or don't know a network of wealthy investors.
So this is, in essence, really crowdfunding, not for purchase of a product or a film or a book. It's crowdfunding for small equity investments in a for-profit startup company.
Sure. Yeah. So the radical shift here is previous in what I would think of as the crowdfunding 1.0 world. There's donations that you can make and receive some type of rewards. You can pre-purchase a product. What this is it creates an entirely new capital market where people weren't able to funnel, let's say, a small portion of their savings into investment in small businesses in their local area.
So if you don't mind, before there was a set of Securities and Exchange SEC regulations around being a qualified investor, right? Can you summarize what those roughly were?
The qualifications to be an accredited investor.
Accredited investor, yes.
Yeah, sure, are fairly basic. One, that you have over $1 million in assets, excluding now your primary residence, or you make over $200,000 a year. So those were very clear financial lines that drew a class of haves and have-nots, at least when it came to access and being pitched investment opportunities. Without that, you're not even allowed to hear about investment offerings and be solicited to invest in them unless you have a significant pre-existing relationship. So those were generally the boundaries there. What this basically did, the crowdfunding legislation, as part of a larger set called the Jobs Act. Crowdfunding legislation is just one piece of it. It creates new rules and access for accredited investors to invest via crowdfunding, and then also for this non-accredited group of investors to participate. What's really important and what the SEC really cares about, their mandate, as a whole, is investor protections.
Sure.
And so that's the thing that's really important. What I've been talking about is my focus on entrepreneurship, on helping people build great companies. There's an entirely other side of the equation here, which is how do you create good opportunities and outcomes for investors? And so that's one of the pieces that's very new and radical and going to be different about this new crowdfunding 2.0 world.
So Chance, talk about what are the rules under this new crowdfunding world? So how, what are the caps? Who can participate? How large an investment can they make? Are there any rules and regulations here?
Sure. So accredited investors in a crowdfunding round can participate roughly at 10% of their annual income, or closer to, if they make over $100,000, people can participate at 10% of their annual reported income. Or as an accredited investor, what you'll also see are more private, what you would call Regulation D or 506 offerings. Those can be larger and include larger investment sums, but I wouldn't call them like true 100% what the public thinks of as crowdfunding, because they're done in these private accredited investor environments.
Okay.
That's one portion of crowdfunding, and that's also the first that will roll out in a series of rulings that the SEC is currently making. So that allows the accredited investors to have their own private place to look at, review, and then fund deals. The next portion of rulings will give guidance and implementation to more general, the Title III of the Crowdfund Act, crowdfunding. And that not only sets up this notion of these new crowdfund portals, which are new entities to serve as kind of neutral third parties.
Of which Crowdfunder is one of the top ones?
Thank you. As a technicality, we will likely never be a crowdfund portal.
Okay.
And that's a nuance of the legislation and this ruling period. Generally, the only entities that are going to be in business anytime soon, based on SEC rulings, are more traditional broker-dealers who handle securities transactions. So then the timing of that first Title II for accredited investors is likely the end of this year or early Q1, and that sets off accredited investing. And then for true general crowdfunding for non-accredited investors, that's likely Q3 or Q4 of 2013.
So let's talk about that one. The unaccredited investors, the mom and pops who want to be able to invest in this cool company down the street that they heard about. What are the rules and regulations there?
So for mom and pops, the investor protections are really focused on vetting and creating a sense of trust and transparency to the companies that are raising. So there's legal requirements on that, both for what the company has to provide and a crowdfunding platform that would be a broker-dealer essentially, or a crowdfunded portal in the future, has to do to vet those companies. So that includes background checks, criminal background checks on anyone who's a 10% principal or greater in a company. They have to go through a background check. Then the company has to review a set of disclosures, similar to what you would see in any private placement, but has a set of standardization that says, what's the business plan? Do you have full financial disclosure here? Is everything in order? Is the company in good standing? And what does your offering look like? Is it reasonable and not dangerous to investors and yourself? And so the crowdfund portal or the broker-dealer has to vet all of that and do a review and then either decide yes or no that that company can go live. An additional nuance of that the SEC will probably put out, and we know because we've been working very closely with the SEC, is what they'll want, and I think this is a great piece of addition that crowdfunding brings that's unique, that didn't exist before, is there'll probably be a cooling off period for fundraising rounds that are seeking investment dollars in equity or debt. And what that means is before they can actually turn on the spigot and say start investing, buy shares, they have to put their offer out publicly for a 3-week period, and over 21 days, the crowd is expected to go and tear that offer apart and say, what's great about it? What's terrible about it? Is there anything fraudulent? And what should other people know? And
So
that process.
the power of the crowd to really do a multi-dimensional analysis of the players and their ideas and come up with an opinion effectively.
Exactly. And so that's where I think mom and pop not only can get involved, but they will also benefit.
Yeah.
If mom and pop who haven't invested in companies before are left to invest in a company on the web that they've never met, who are trying to raise equity, and who knows when they have a liquidity event or made whole, that maybe isn't the best idea for mom and pop. What is probably a better idea is that they look at and see potential signals of quality about who a company is or who the founders are, based on other people who do know them or a third-party connection endorsing that person.
Yeah.
And then alongside that, once that's happened, then I think they'll be better off investing in people they know and investing in neighborhoods and the types of businesses that they know. So not just anything.
Awesome. And is there a limited amount that a company could raise on this?
So in the non-506 accredited environment, in true crowdfunding, that will be $1 million per year per company.
Okay.
So that does set a cap. And then there's a cap to non-accredited investors based on their income. So they're limited at what is generally 2.5% or around $2,500 of their annual income. So it's not like they can put in $50,000 and lose all their money. There's a significant cap on how much a non-accredited investor can
So they can make small bets on you as an entrepreneur
Exactly.
and enjoy the fun ride of that and potentially some huge upside. But if they lose it, it's no big deal.
Yeah, and the other piece is that I think there's an entirely new market where people, if they're investing $1,000, if you think about what mom and pop might care about, they might care about the dollars and cents return, and that's one story. But there's a more personal and emotional, I would say, set of decisions that people make around investing. Not only that they might care about the founder or the service or the brand, but there might be impact along with that. And so that's something we're really excited about helping accelerate, is this notion that with $1,000 you can invest in a long-term sustainable for-profit social enterprise, and not only invest for profit, but invest to help accelerate some purpose or impact.
Sure, and you've also got all of these investors who are now fans of the company, promoting it, and really driving its visibility out there in the community.
Yes.
So let's talk about the impact of this for entrepreneurs. Because as you know and I know, I spend 80-90% of my time historically raising money. And that's just any CEO, any entrepreneur. If you're not raising money, you're either out of business or you're lucky.
Yeah.
Or you could be really good, but that's usually... So getting access to capital is really, really tough. One of my friends who I've interviewed on this series is Eric Michikowski from Pebble Watch, who had runaway success with Pebble, right? Raising 10 million plus.
Yeah.
Advice for entrepreneurs who are thinking about starting a company who might want to use this crowdfunding mechanism. Any thoughts? What top advice for them?
Sure. Two things, and some of this is unique to crowdfunding, and a lot of it's not. So this is also advice, because crowdfunding I see as a magnifier, an accelerator of the things you're probably already doing or not doing as an entrepreneur. So one, I would say, are you a member of a community, and are you working with mentors, advisors, or investors who really have learned the lessons both in success and failure that you're going to need to address? That's an important piece, and what crowdfunding can and will do is be a megaphone for those things happening. So an example would be if you're funded by an accelerator, and there's a great handful of accelerators and incubators here in LA, it's a really great burgeoning community. There's some trusted people who, if they're going to make a bet and invest in a company at that incubator stage, not only is that a good bet and a signal of potential quality about the founding team, but they're going to get the mentorship of that successful entrepreneur and investor. And so I would say that's a really good place to set yourself up for what we call some potential success around your social capital, which is one important piece of the larger story of who you are and why someone should trust and make an investment in your company. So social capital is one really important piece, which is essentially the sum of all the relationships and endorsements that you, your founding team, and your business have. But that's only one of what I see as three main components of successful crowdfunding in the future for investment. The second one being your pitch and plan. So it has to be credible. There needs to be a story told that show a narrative of where you've been, where you are now, and where you're going. And then that also has to be credible. So what are your financials? What are your assumptions? And allowing people to pick into that and say, I believe or I don't believe.
Right.
And then the third piece, which is totally new now, is the return model. So this, what didn't exist and doesn't exist at sites like Kickstarter. So what is the financial opportunity and benefit for people? So there's not only financial return in that piece, but there can also be impact return too.
Sure.
So that's a brand new set of things, and it brings a new dimension to crowdfunding as a whole.
So to recap those, number one, people typically give to friends and family, or people typically raise their capital from friends and family. So is there a community that you're part of that you can utilize this crowdfunding tool to allow that community to invest in you? The second is we're animals that love to tell stories, and so have you been able to tell your product or service story as a compelling story? And the third is, yes, the financial return, but is there an impact to your community, to your friends, to the people that will make it a compelling investment in additional to the revenue?
Exactly, and I think we could go a mile deep into each of those. I don't mean to put the investment return at the bottom. It's just the new add-on piece that crowdfund investment does, and I think it's pretty revolutionary. So why should you pay attention and care that Pebble Watch is raising $10 million? It's really impressive, but what's in it for you if you're not a fanboy of the coolest new
gadgetry,
right? So what's in it for you? And so that's the excitement, is that it provides a much larger pool of potential interested people. Let's say your local community. So if there's someone who has had a successful restaurant here in Los Angeles, and they're a great well-known chef, and they want to open up a new restaurant at a new location here in Los Angeles, imagine them being able to go out to their existing social network, that social capital, but then have it localized so that they can connect to and get in front of the rest of the local community. And that's really exciting. And when they have alongside that the promise of financial return when they're successful, that can really bring a giant amplifier to that opportunity.
Let's talk about your company, Crowdfunder. Talk to me about where it is in its stage and what its mission is, and who is it providing services to?
Sure. So outside Silicon Valley, there's very few companies that have raised money online. And there are some unique standouts that happened on sites like AngelList or Kickstarter or Gust even. But those are generally the standouts, the very small percent of deals that might have already had funding or would have already gotten funded by the smaller community that is already investing a lot. If you're not one of those 1% insiders, if you don't have that network and know Ron Conway, and if you're not the cool, sexy new tech company, getting access to capital and being in that unique place of deal flow is very hard, if not impossible. So that's the much larger opportunity that Crowdfunder is working on and that we're creating, is creating a process and standardization to create a higher probability for a small business or a social enterprise, or it could be a tech company, to raise dollars, and to do that in a more collaborative fashion. That's really what we're focused on.
So let's give me a concrete example on how this would work.
Sure. So
who's your typical customer, or what are they doing on Crowdfunder?
So it's a great social enterprise. Let's take one that we're working with right now. It's Listen Headphones. And for every pair of headphones that's sold, they not only make a happy customer, but they also help a hearing impaired child. So this is a social enterprise that's for profit, but has very simple and clear impact goals to help hearing impaired children. What Crowdfunder does is create a mechanism for them to not only tell their story, like you might on a Kickstarter, but then to go out and go to a community, whether it's local or global, and say, here's an offering, and we want you to help the long-term opportunity of what this company is and what its impact is. What we create is not only that storytelling mechanism and the social network to bring social capital, But then we have a standardized process for that investment return offering. So we allow companies to upload their documents, and we standardize that set of documents to say, what does this offering for investors look like? And we do that behind a private wall so that your business plan and your financials aren't out there for any competitor to grab. So you have the control as a founder of a company to say, I want access to this person, but I don't want to give access to another person because I think they're not trustworthy. I just don't know them. So there's that private layer. And then once you've been vetted, once you've had your fundraising approved by us, then you can put that either equity or debt model live to the world, and then that can be funded by them. So we have all of those things built and ready. What we're waiting for are the crowdfunding rulings from the SEC and a variety of tweaks that we'll have to make sure that people are in compliance when that's happening.
You'll be basically utilizing the Title II accredited investor version of the crowdfunding legislation, the Jobs Act.
Certainly. So we're working with accredited investors initially, even though we have a crowd of people who are excited to invest as non-accredited investors as well. And those will be the first offerings that happen. And we're making sure to work with what we think are a great set of initial companies and then give them unique offerings to that pool of accredited investors to participate in.
How big, one of the things is I've been massively impressed by what has been the exponential growth of crowdfunding, as you define crowdfunding. I think the numbers that I read about this year is that in the loosest definition of crowdfunding, there'll be 530 sites generating $2.8 billion of crowdfunding in 2012. It's going to escalate to like $15 billion by 2015. I mean, that's extraordinary.
Yeah.
The liberation and the velocity of capital. And I can't wait until it starts getting into the equity side of entrepreneurs. What's the potential here?
Well, I think the potential is pretty amazing, seeing that, I think humans have a hard time understanding exponential growth. And so what we have here is a market of, take for a minute, the entire $30 trillion that exist in personal savings and investment accounts in the US. That's, you and I have money in the bank, and the bank lends it out 10 times over, but they don't lend it to small businesses. And it's people who have money in mutual funds that then go back into the larger companies through the stock market and the like. What we will see long term is a shift of capital from Wall Street to Main Street, where people now have the opportunity not to reinforce and just invest in the larger stock market with companies that have already been established and have already gone through that growth phase, and all of the large wealth has been created in them going public. What we have the opportunity is for a portion of that capital over time to shift that $30 trillion, and that's just the US, into those smaller early stage investments.
So really to go to work at the most highly leveraged point in innovation.
Exactly.
The Title II accredited investor, and by the way, there are how many accredited investors? Is it tens of thousands, hundreds of thousands, millions?
Oh, there's millions in the US. We're talking to a variety of groups, for instance, that have self-directed IRAs. And they're interested in investing a very small portion of their retirement fund in a higher risk area. A lot of it should go into very low risk stuff, and some of them are interested in doing into a portion of it. So what you'll start to see is groups of accredited investors who've already pooled themselves, kind of waking up and saying, I know there's a lot of innovation. I know there's social innovation. I want to be a part of that. And
it's fun.
I didn't have access to that before, and now it's here.
And it's fun instead of just investing in, this consumer product or
what you've always done.
Yeah.
Yeah.
Is there a limit in the size of the Title II investments? You said $1 million total for the Title III unaccredited investor. Is there a limit for the Title II?
So there's no existing limits as the legislation has mandated. What you could see is some cap put on by the SEC, but in our conversations with it, they haven't expressed any specific interest.
So you might see $5, $10, $20 million.
Sure.
So you might actually see companies, instead of going to the traditional venture capital route, we're looking for $20 million, go to a crowd of accredited investors and say, hey, here's my pitch. Would you put in $20 million? Yeah,
I try to think of the inverse. Rather than thinking, what is crowdfunding? I approach it and I say, investing has been happening for years. And so what's true of investing should and will still be true, that there's risk, there's failure, and that people do deals with people that they like and know. So there needs to be trust, there needs to be credibility, and I'm not looking to break apart what angel investors do well, which is bring mentorship and experience and decision making, and oftentimes drive valuation and other strategic initiatives within a company with their money. That's important. And so what is really going to happen is just the socialization of those things and putting it on the web. So you will see VCs in the future doing these deals, even though I think they're talking about how they don't want to. This is an acceleration of social interaction. It's acceleration of efficiency in fundraising and in the market, both on the capital side and on the structure side. So I think we'll see big gains in how long does it take to put together deal terms, and more standardization of that and less all over the place.
I mean, accelerating the rate of doing deals.
Yeah.
And if you think about capital as coming in layers for the entrepreneur, the entrepreneur comes up with an idea, might get a little initial capital from mom and dad or from friends, might take their own investments and put it in. And then other layers are, angels, super angels, now the crowd, VCs, investment bank rounds. Where does Crowdfunder come in as a layer?
Yeah, so I see what crowdfunding fits as a place in the investment ecosystem, or the life cycle of a business, is that it can be, in some companies, a great place for it to validate an existing set of traction model, existing prototype that's working. It's probably not a great place, certainly in investment, to raise equity for something that is barely started or an idea. So that's not what we're focused on in Crowdfunder, but you will see companies servicing that very early stage startup space. But I find that really high risk, and that should be friends and family or risk capital at the very small end. So you have that inception stage. That's not really where equity-based crowdfunding will be best serving the community. It's in this place where someone has an existing product, which could mean that they want to raise equity, but it could be what I think of as an ongoing concern, a company that has cash flow and has had problems getting a $200,000 loan from a bank. And so they can serve as debt because they have existing revenues. They're a small business and they have great customers. But for some reason, they didn't have enough cash on hand to warrant a loan from Wells Fargo, right? And so the community can come in and fund that small business to help it buy the additional inventory it needs. So there's this.
But these will be equity, not loans.
No, there'll be a large market and debt-based investment in crowdfunding. So equity is just one piece, and equity really only fits some of those highly explosive, high-growth companies where people are saying, I'll ride long-term and give you some money and not look for a return short-term, because I think the potential here is to scale. And so that is often more innovation in tech.
Right.
But that's not a great fit for a small business that is never going to have a 10x or 20x valuation.
Right.
Yeah.
But they'd be willing to take on a loan at 7%, and
certainly,
and they have good, decent revenue.
And especially if they could go to a crowd and get it in 45 days without pitching banks and investors one at a time.
What a blessing that would be.
Yeah, and then the other piece that's exciting is that you don't have to be a small business to do this. So you will see big brands saying, I might want to pre-sell some of my products, which Nike could do with a set of shoes, and it would be, I think, a huge win. But they could also capitalize either their own initiatives or partner initiatives and help bring investment or this more donation model crowdfunding.
So you think that the Fortune 1,000 companies, I don't want to call them the Fortune 100, but some of the larger companies might actually come in and utilize this as a means for getting capital?
It's fantastic marketing. In fact, the lines.
Yeah, let's dive in. So we've been talking about the benefits to the entrepreneurs. Let's talk about the benefits to the CEO, the CFO, who's looking to, he's got and might have $100 million, $1 billion company. What would they do with you?
So crowdfunding is inherently social, meaning you're not looking to get a couple of investors to validate you and help you ride off into the sunset and then try and get customers. Crowdfunding is in a lot of ways a shortcut to getting customers and merging that with the process of financing or pre-selling what you're doing. And that's a shift in the way business has been done. I would even go as far as in my utopian long-term ideal to say that there's this notion that you were either in or out of a company. You were an investor and you had shares or you had nothing. And what we're starting to see is a new set of relationships form around companies, whether it's a corporation or a nonprofit, where people are able to align around that company and contribute or support, whether that's through money, whether it's through time, whether it's through talent, and be a part of that if they choose to. And so that's, I think, pretty revolutionary and blurs the line between investor and participant or employee. So if I give a company, a brand that I love, $500 or $1,000, I become a very small potential investor, but I'm probably going to do that more often because I really love that brand and the team, and there's something that I really identify with personally, and I want to contribute more than just get a return on that money.
The most. I mean, Apple saw this, right? I mean, how did Apple get such a huge valuation? Everybody who was a customer of Apple wanted to own a piece of that company as well.
Yeah, exactly. So you can't sell short. In fact, they might be one and the same in the future. How do you build a brand long term, and how do you finance a company? Guess what? If you create a mission that you invite thousands of people to be a part of in what your company is doing and the product it has, and then you put up a financial way for them to contribute and be a part of it, I think that's really exciting. And in a strange way, humans don't think about the risk reversals that actually affect us. If I went out and said, I want you to take $500 and I want to pay you that, Peter, and I want you to help my company, there's no way I'm going to get you to say yes to that. I know it, no matter how interesting or how perfect you are for that $500. But if I said, Peter, I want you to pay me $500 because I'm doing something really fascinating and you'll be a part of something very large that is mission aligned and value aligned for you, you might be actually more likely to say yes to paying me $500 than to me trying to get $500 for an hour of your time.
So, question, do you think there's going to be market cap limitations on this? Because, I mean, will a company raise, a company that's got a $100 million or a $5 billion valuation be able to raise, $5, $10, $20 million? Will that be possible on this?
Sure. Well, I think, depending on if it's this more Title II accredited crowdfunding, would accredited investors take that deal outside of crowdfunding, yes or no? So crowdfunding doesn't change that. It creates access to that. And it doesn't break what's wrong if there's a bad offering, and it doesn't fix it.
It just offers more opportunity.
Exactly.
So for example, just for fun, are you familiar with my company, Planetary Resources, the asteroid mining company?
No.
It's a company we announced. We've been working on it for 4 years. My partner Eric Anderson and I, working on, backed by a group of 9 billionaires: Larry Page, Eric Schmidt, Ross Perot, Charles Simonyi, amazing people to actually build the technology to go out there and mine precious metals out of asteroids, platinum group metals. We kept under wraps for 3.5 years, and we announced it in April, and had huge global publicity. We got tens of thousands of emails, and the email we had 2 emails that was most frequent. One, can I get a job with you? And the second is, can I invest with you? So
high quality problems you have.
Yeah. Well, but of course, there was no means to, if we wanted to even take investment from 2,000-3,000 people. But this becomes a means for a company that's got a lot of publicity and promotion to be able to take capital in from multiple sources.
Yeah, and I think you'll start to see larger companies, more established companies, companies with a great brand name, people with great leaders with a brand name like you, really scale. How big can this get, and how broad can it reach, and how many people will participate?
What's your guess? I mean, what kind of deals could be done on this? Will you see 20, 30, $50 million deals being done on this?
I could certainly see a $50 million fundraise being done across accrediteds within the next year. Sure. So, there's small examples and hints at that. There was a crowdfund type model applied to a skyscraper that was built in South America. And so you see projects like that already starting to spring up. What is really fascinating is that there's some validation to this idea that collaborative finance is not weird, and it's not nascent, and it's not in the future. People are participating in it now in a pretty significant way, and when you turn on this added, and I can get financial return and social return, I think it's going to scale even that much faster. So people love the idea. not of, oh, can I just put my money off and try and get money back? They love the idea that they are tying themselves to something they care about and they're excited about, and they can wed that with financial return. That's new. And so I think that accelerates it a lot.
And who, if I could put it bluntly, whose ox are you goring here? Whose business are you replacing? It's the investment bankers? Because this has been, it used to be a very baroque and broke model, right? Where you'd hire an investment banker, they'd write an offering, they would take it to a series of either wealthy investors.
Yeah.
Isn't that the case? I mean, isn't this a way of taking that process, which was expensive and long and laborious, and liberating it?
Yeah, yes and no, because I don't see us as a investment bank, even though we are a financial services company and we're a broker-dealer, and that's an important aspect of what we do. In the 80s, there was this business that you were a business broker, and you would go and help raise money or sell a portion of a company. And that kind of went away because it was inefficient, it wasn't a great business, or there weren't enough good opportunities. And then you saw, I think everyone in finance that's a broker-dealer, speaking to are we an investment bank, is that our market? Try and go to much bigger deals and much fewer of them, mostly because of liability. What we're seeing is technology, the social web, and the right economic time to bring this new marketplace of early stage investing online. And so I think it's most impactful, and how we see ourselves is, it's not a replacement. There's already great angels, and angels can be complemented by capitalization from the crowd. Whether it's an angel wants to do a deal and invest in a Series A, and the crowd has funded an early seed stage investment and validated that company as customers and investors, that's potentially a good set of steps in the life cycle where we participate alongside existing capital, not against it. But you're also going to see, I think, eating away at maybe a few of the angel deals, but you're going to see an entirely a birth of a new small business investment world and capital market. And then you're going to see probably a little bit eating off of what is arguably $880 billion or $1.2 trillion Reg D market for private placement offerings. And that has existed privately, and other people didn't have access. And now you're going to see deal flow of that start to be crowdfunded in this accredited world. And so how quickly can it start to eat up some of those deals? I don't think it's going to be a huge portion in the first couple of years. This market really has to get its feet and get credibility and have some good outcomes. And once you start to see that happen, then I think the public and our legislators and our regulators will start to develop an appetite when they witness the economic development potential that this has.
And on that note of economic development potential, this can be an extraordinary accelerator for job creation and growth in the United States. I mean, that's one of the reasons I assume it came under the Jobs Act, is that capital, access to capital for innovation is a huge multiplier.
That's, I think, what most people are most excited about, and the reason this bill passed in the first place is politics aside, even though I think jobs is the big rallying cry. People understand that access to capital is important from a development standpoint. And if you look at it from a macro perspective, what we've had a long time is a top-down effort of large pools of capital and the government trying to provide solutions from the top down and say, we understand business and we're going to make it work. And there's been some success, but there's a lot of failures and a lot of waste. What crowdfunding essentially is a bottom-up approach that says we don't need centralization, we need platforms to allow people to aggregate around the things that might be working and help fund that development. So what we're really excited about is, I agree, I've spent time at the White House, at the SEC, and on Capitol Hill. Jobs is the rallying cry that is, I think, the most exciting about this access to capital that crowdfunding represents. So I saw you write a piece in the Huffington Post about a jobs prize that you're interested in doing. We have a nonprofit initiative at Crowdfunder, which is called Job Start, which is to, one, provide some thought leadership and thinking on, okay, access to capital, jobs, sure, but how? So a couple of those considerations are, if it's in the tech world and you fund a company and a software developer has a job, oftentimes that's not a job, that's someone switching jobs. So it's not new economic development and job creation. But if you can fund someone who has been out of work or starting a business, or someone who's going to hire, let's say, veterans who've been out of work and unemployed for the last 3 years, you are starting to move the needle potentially to get people back in the workforce.
Interesting. So if you actually go to an unemployed population set and can create something unique and valuable for them, there's the greatest value.
Exactly. So as an example, Commerce has a group that they're working with. It's called Hiring Our Heroes. A lot of them are out of Chicago, and it's a group of veterans who are learning new skills, getting retrained, and getting into the job market. So can and will crowdfunding, and this is one of the things we're looking to do with JobStart and Crowdfunder, is provide a platform to say, here's a good opportunity that a lot of people care about that is getting mentorship and resources, and does the community care to fund this and to help employ those people?
That's great.
Capital.
Good on you, man.
Yeah, thanks.
So in a typical crowdfunding Kickstarter, Indiegogo, Rocket Hub like play, your ability to raise money is a function of how much you publicize your campaign.
Yep.
Because just putting it up there isn't enough. It actually has to go viral and people have to know about it. Is it the same thing here? Does someone within the Title II accredited investor platform still have to publicize it? How do they do that?
Sure. So we built a social network rather than just focusing on, hey, let's create a cooler widget for videos to tell a great story. That's an important piece, but it's not going to move the needle significantly for a large pool of capital. So what we're focused on, what we built, is a social network to take those people who start to make a little bit of success and get momentum and magnify that and show it to the community, whether it's...
So how big is your community? I mean, you're building right now in anticipation, waiting for Title II to become active.
Yes.
Do you have a community already?
So we have a community. We've done...
Can you say how large that is right now?
Sure. In our user base, we have people who have 12,000 potential crowdfund investors who've pledged to invest up to $17 million if they found offerings that they were interested in.
Okay.
We also have relationships and distribution to a much larger set of accredited investors. I can't really speak to that right now. So we have and continue to bring a larger set of resources and investor eyeballs to take a look at these offerings and say, is this interesting to me? It's not our role to say those people should invest. What the person whose job that is the entrepreneur.
Of course.
So we don't pitch companies for them. We don't say that they deserve funding or do or don't. We make sure they're not fraudulent, and then we create this magnifier for them.
So let's go a year out now. You've had a few deals funded. Let me get a couple of gut level checks. How many deals a year do you expect, do you hope will be on Crowdfunder? Is it dozens, hundreds?
Sure. So in 2013, which is when we'll start to see things just kick off in the accredited crowdfunding world, what we're not focused so much on is how do I scale like crazy in year one. It's how do we create a safe marketplace that has what we think are reasonable to quality offerings. Yeah. So that means part of our product is sourcing great deal flow, which means we need to market and get a lot of great entrepreneurs on Crowdfunder. And we think we're doing pretty well at that. The other side of the equation is making sure that there's that inventory for investors to be interested and engaged and stay there. So we're focused on a smaller set of higher quality. And I'm also focused on that because I know that year one of crowdfunding is everyone watching saying, how is this market going to kill itself?
Yes.
And so not only are we focused at Crowdfunder on that, we're also part of an industry and trade association that we founded.
It's trying to be birthed in a responsible fashion.
Yeah, so I would love to say I'm scaling up and going crazy and I'm going to change the world tomorrow, and that would be the wrong thing, I think, to do here.
But so my question is, if I'm an entrepreneur and I'm accepted into the platform, I'm properly vetted, I've got a quality opportunity, and let's say early on a platform like Crowdfunder, there might be a dozen deals done. I'm making up the number. I'm dependent on the population of accredited investors that you have in your site, because I'm unlikely to go. I'm not going to be tweeting about it in Facebook. Am I promoting it through my social media?
Sure. So there's really 3 points of when you're fundraising, and you know this as a fundraiser and an entrepreneur. There's prior to you ever doing your round, you're building a network. In fact, that's probably where the most groundwork is laid. So what we coach people to do and have created a system for is build a company profile and start to build that social capital well before you're ever interested in fundraising. In fact, do it now if you want to raise in 6 months. As you start doing that, you build endorsement, you build the relationships, and that network that can become your funding network in the future. Then there's the planning your launch and fundraising. And so we help in both of those spots by helping you not only tap into your existing social network, but market yourself to the crowdfunder community. And I think the ways that becomes really interesting that we're focused on that are pretty unique are localizing that. So personally, I would be much more interested to learn about opportunities, about entrepreneurs that are here in LA. One, if it's a small business, and two, because I might actually go and talk to that entrepreneur and mentor them or advise them or at least see them personally. So that's a big opportunity that we help provide as a platform and help the marketing of what they're doing. And then there is that big push, which you're talking about, which is I'm fundraising, I need people in.
They need deal flow and I need investor flow.
Exactly. Yeah. So you're absolutely right. It is a function of what is the community that you have? Are there investors there? But at the same time, you're also building that community for yourself. So they exist side by side.
So, but ultimately, in success, a year to 5 years from now, your hope, I assume, would be to have hundreds of thousands of accredited investors on the site who set up flags like, I'm looking for space deals, I'm looking for water purification deals. Those are the areas I'm interested in, and I'm interested in entrepreneurs who've had 2 or 3 successes, or I could parameterize, and your site might bring those kinds of deals front and center to me.
Certainly. So we're working with groups of accredited investors to build partnerships with them. That potential distribution list is several million at this point and growing. So that's a huge area that we're really focused on, that I know if we can nail that, that's huge value. That is what it looks like. When you sign up for Crowdfunder, I want you to tell me as an investor or as an advisor what you're interested in, who you are, and we get you to connect your LinkedIn and Facebook, and then we extrapolate as much as we can out of that and say, okay, you live in Los Angeles, you're interested in social enterprise and innovation. Great, here's opportunities in your area and in your interests that we think you're going to be interested in. Now, are you interested in contributing? Are you interested in investing? Do you like equity deals or do you like debt deals? And so that is more of a pull mechanism. We don't want to be constantly trying to push. We're creating a platform where people can engage in that more personal level.
And my final question about Crowdfunder as a business, do you take your upside in a flat fee or in a percentage of capital raised?
So we take our money as a percentage of capital raised. So that's the clearly stated model under the Jobs Act and the SEC that they understand. There are some fees that will be required to do things like background checks. Sure. We're working to make that really minimal and efficient. I'm a big believer in a performance model. So I want to help you raise money, and then I want to take a little bit
together.
Exactly.
Awesome. So, I mean, this is really exciting. I mean, for someone like myself who's raised hundreds of millions of dollars and who spent all my time fundraising, you know, this is a dream come true. So I'm really excited about seeing you and this industry succeed. But what keeps you up at night?
I would say federal regulators keep me up at night.
I'm so sorry to hear that.
That's certainly one of them. Making sure to balance my desire to drive a platform where there's a large amount of entrepreneurs being successful, which is them raising money, and balancing that with what are the terms under which investors are investing in that, and how do we help create good outcomes. So it's really subjective, what is a good deal for an entrepreneur versus an investor in that deal. And that is both something we have to care about and give education to for both sides. And at the same time, it's not necessarily our role to say exactly what that is, because we're not DLA Piper giving them legal advice. So that's one of the things that keeps me up. How do we create a scalable and fair and efficient model for what these fundraised deals look like? And once that problem gets more solved, I know it'll accelerate things and ideally create better outcomes. But the other piece that keeps me up at night is, how can I incentivize a much larger pool of people to share this vision and the importance of access to capital and the importance of education in the space? So educating investors and educating entrepreneurs, like, we can't do all of that, and that has to be a community-based level. So those are the things that keep me up at night, to say, I really believe in the long-term power and social change that this market will bring about. I just want to make sure it gets its footing and then have other people play a good part.
You mentioned you're part of a community of companies that are going to be operating on this legislation. How many primary companies are in that community right now?
So are you asking about the industry and
Yeah,
regulatory?
how many other companies similar to Crowdfunder exist today?
So there's a good handful of companies. Really, during the legislative and regulatory process, there's roughly 20 to 25 leaders of companies that have been the major drivers and participants. And it's been a very cooperative and, I guess, pretty fun process. And that core group is still close, and I think a variety of those people will be successful. And that's what's, I think, great about this market is it's a lot bigger than one company.
Do you think that people will regionalize so that you'll actually potentially focus on U.S. companies or L.A. companies, and other people, Minneapolis or D.C. companies?
I think you'll see some of that. There are benefits and network effects here where one person who's getting some traction in a variety of areas will then have an easier time getting traction across, a broader set, whether it's the US or globally. So we're focused on a broad set across the US and localizing that to the city level in each platform. You will see people just focused on how do I crowdfund for tech and whatever, but I think those aren't built through their own tiny little sites, but are built as adjuncts and add-ons to the larger networks, because I think that's a lot more efficient model ultimately. Yeah. But you will see crowdfunding for consumer products over $1 million in raises that already exist. It's called Circle Up. We're, I think, well positioned to be one of the broader players across three main verticals: small business, social enterprise, and tech. And then I'm really excited to see the marriage globally of, if you can create this market in the US and it really starts to grow and there's investment capital dollars flowing, what happens when you open up the Mexican market and capital can flow in and out of that to fund or to invest in companies across the border?
Sure.
What does that do to international relationships? What does it do in access to capital? And what does it do for companies that didn't have access to great investors who now do?
Yeah.
And so there's this much larger piece of economic development and safety.
Following in the wake of Kiva,
yeah,
in one sense.
Sure.
That's fantastic. Chance Barnett, a pleasure to speak with you, and real fan of what you're doing at Crowdfunder. Thank you for that.
Thanks, Peter.